This 17% correction on the Nifty from an all-time high of about 26,200 over the last 5 months has been a very painful journey for investors who came in the last 1 or 2 years. The falls on the Nifty and the Nifty mid-cap index and the small-cap index have been much larger, much deeper, to the extent of about 25 to 26% in the same 5-month time period. What's worse, many stocks, whether they are frontline PSUs or defense counters or the erstwhile momentum counters, they have corrected even more sharply, anywhere between 35 to 50%. All told, there is pain all around, and a lot of people, especially newcomers, are losing focus and are of course looking at reasons thereof. Whatever reasons that might be: overvaluation, Mr. Trump's entry into the United States, a tariff war globally. This undoubtedly is an opportunity, ladies and gentlemen, to buy quality assets and buy them in a very simple fashion using systematic investment plan. Over the last 1 week or so, we've been highlighting quality funds where those who are first timers, those who are existing players can put in fresh money and enjoy a bounce maybe 1 year later, buy a quality asset available about 20-25% from its all-time high, and then ride the rally through systematic investment plans. In this, ladies and gentlemen, endeavor, we are now focusing on Parag Parikh Flexicap Fund. This is one of the most popular schemes that have been running over the last 10 years or so. It has created a fantastic return base for its investors, and over a 10-11 period compounded somewhere like 19-18% in the last decade or so. I'll put it very simply: if you had invested a monthly SIP amount of 10,000 rupees over the last 11 years, all told, you would have given Parag Parikh Flexicap Fund 13,20,000 rupees, and that would have compounded to 41,52,000 rupees. Let's get deeper into this particular fund. What you see in front of you are some data that our team has collected. It has a net asset value for the direct route at 83.86. The fund was launched in May 2013 and is now one of the most popular schemes, like I have said, having an unenviable assets under management of about 89,700 crores. The fund manager has compounded the corpus at 19.76% over the last 11 years, and Parag Parikh Flexicap Fund invests in 63 stocks so far. Now, why do we prefer a Flexicap fund at this point of time? The name itself gives you an understanding. According to SEBI norms, Flexicap fund managers can invest anywhere. They are not constrained by market capitalization. They are not constrained by geography. In fact, the reason why Parag Parikh Flexicap Fund is so popular is that it invested globally at a time 3-4 years ago when the Nasdaq investing was not so popular. Amongst its top 5 picks at that point of time were companies such as Google, companies such as Facebook, companies such as Microsoft, so on and so forth. Even now, amongst the top 15 stocks, Google, Meta, which is Facebook, Alphabet, which is again Google, and of course Amazon find mention. Now let's dig a little deeper. The price to earnings of the total portfolio of Parag Parikh Flexicap Fund, despite such growth and momentum, is still below the Nifty PE. This, ladies and gentlemen, is a salute to the fund manager who runs this, because he is catching growth, he is catching momentum, and yet keeping the PE of the fund, the average PE of the fund, of the portfolio, at a substantially sensible level compared with the Nifty. As I have said, the major holdings are HDFC Bank, Bajaj Holdings, Power Grid, Coal India, ITC, ICICI Bank and Kotak Bank, Maruti, and then come the global holdings: Meta, which is Facebook, Alphabet, which is Google, and of course you have Amazon as well. Now let's look at the returns from a sensible point of view. If you look at the 10-year performance, Parag Parikh Flexicap Direct Fund has appreciated 17%. It's handsomely beaten the Flexicap category and the BSE 500, and out of 34 funds who have a 10-year history, the fund Parag Parikh Flexicap Fund ranks first. In fact, when you look at the 7-year return, it's first out of 39 funds. If you look at the 5-year return of an average compounding of 26%, Parag Parikh Flexicap ranks second. And more importantly, in the year-to-date performance, it's first. In the 3 months performance, it's first. And in the 6 month performance, it's first. It's very simply saying that when the market falls rapidly, Parag Parikh Flexicap Fund falls less. When the market rises, Parag Parikh Flexicap Fund rises even more dramatically. So it outperforms a bull market, and it also outperforms a bear market by falling less. So these are the qualities, ladies and gentlemen, that one needs to create long-term value in. This is a very, very sensible fund if you are looking to invest in India's growing future. It invests across categories, whether they are large caps, mid caps, small caps, or global, and at the same time it keeps the value investing funda in its heart. So this is something that you can get into in a systematically investment plan, put in a lump sum if you wish to, and of course put in a monthly SIP as well. Again, we are providing you with investment opportunities and investment ideas. This is not an invitation to buy or sell them. Should you wish to get into it, you need to consult an independent mutual fund advisor and then proceed forward. As usual, I have no trading position or investment position in Parag Parikh Flexicap Fund. So this is something along with ICICI Prudential Equity and Debt Fund that you can consider. And of course, it's a wonderful vehicle for all those people who want to make an entry at this point of time in the market. So please keep an eye over the weekend, study it, and then get into this. If you like it, again, consult an independent financial advisor.
If you like the video, do like, comment, share and subscribe.